So now I've got the screen shared, and I'm putting the mic as close as I physically can. So because we uh, had some issues earlier with the sound, apparently. So I hope all is good now. So it's been quite a frustrating day three, Wednesday CPI day, from my perspective. Um, but again, it's if you're not on point, if you're not feeling great, I mean, trying to scan around the markets has not been an easy chore. And I was stubborn, sticking to gold, convinced that I was going to get a trade out of it. And so I took a couple of attempts to short it and made losses um, on the day. But we'll see if we can't recoup those uh, for the rest of the week. Um, so let's just go through this dollar first of all. So the data came out, and apparently it wasn't strong enough to really nudge the dollar higher. Although we got a knee-jerk reaction to the upside, as you can see here, it was very choppy and difficult to navigate. Um, so, I mean, it appears that the markets are pricing in a small chance that the Fed will hike next week. But this monthly print that we got, which came in as 4.3 year on year versus 4.7 year on year in the core, as I said, wasn't enough to seal the deal for a stronger dollar. So instead, the focus now is going to be on the ECB. And we're looking for the divergence between the Fed and ECB, where the Fed is expected to hike towards the end of the year. Um, and although there has been some hawkish comments around the ECB, um, there's been a I can't speak, deterioration in real economic data, and also the moderation in core inflation since the last meeting. So the market is it seems as though the market's pricing in a hold for tomorrow, and that could be a catalyst for the continuation in the US dollar. I mean, we've got these yields here that I'm looking at now, which are also underwater on the day. So, are we going to get a correction in that and a move up? Is the question. So that we'll see this daily outlook for the dollar, which I've just switched back to there on the chart, um, heading higher from support. So, still biased long the US dollar as per the impulse correction and what looks to be the beginnings of a slow grind to the upside, which might pick up pace tomorrow on the ECB, perhaps. Um, okay, so as per usual, if you've got any questions, any pairs that you want me to look at specifically, please let me know in the chat, and I'll happily go through those with you. We've got dollar yen here in resistance. On the daily chart. And we can move over to Aussie yen because we've got the Aussie jobs data to contend with in Asia. So on that note, let's just look at the Aussie first, and then we'll look at Aussie yen. So we are going to move out to a weekly chart. We've got the M formation, so an upside move could be on the cards. From a weekly standpoint, but we need to get above 64.58, which is that resistance there, that old low. So biased long, potentially biased long on the weekly chart there, as per that M formation. So is this therefore is a would be regarded as a period of accumulation. So this can take some time to play out. And as I said there, we've got that level there. I mean, we've already come up into it, but we want to see something convincing out of this W formation on the downside here. So neckline is holding a support here. Um, Now, this candle here, that wick represents a bullish impulse on the lower time frames, and they tend to get filled in. So you've got a bearish wick, a bearish candle with a long wick, small body at the top. You could see the price move into that for a retest and then potentially stabilize to go higher. That's just an observation on my part with regards to those types of candles. So you've got this sort of grind to the upside, a move down could be on the cards at this point for a move up. So with respect to the data coming up today, you'd be looking for support in here. If the data proves resilient, then that could be a bonus for the Aussie. I'm just going to put my mic on pause because we've got a lot of noise going by at the moment.